Welcome to the Capital Spreads Weekly Look Ahead. Today is Tuesday, the 2nd of April 2013. So back from the Easter bank holiday, extended weekend there. The US markets were open yesterday. It was a very quiet session. But we saw some pretty bad US economic data in form of manufacturing numbers. And that just meant that the US indices just pulled back a little bit, and it meant a soft session for Asia. And we were calling the FTSE quite a bit lower. Well, not a bit lower. We were calling the FTSE to open around 10 to 15 points lower this morning, around 6,400. But it, ever since the open, it's been sort of slowly creeping higher. And we've actually had quite a good start to what is normally, historically, quite a bullish month for the FTSE. So currently FTSE's at 64.40, the Dow at 14,590, the Eurodollar is at 128.55, cable's at 152.25, gold is at 1,600. Really, gold has done very little over the last couple of weeks or so. It's been around that 1,600 level for quite some time now. And Brent is at 110.90. So as mentioned, April on the whole has historically been a pretty bullish month for the FTSE. On average, the months where it's seen a gain, 20 out of the past 29 months of April, it's gained on average around 4%, and any falls have been around 2%. So April tends to be, or has been in the past at least, quite bullish, and we've got a decent start to that month so far. Today we've got some manufacturing data out from the UK, and I think the theme for this week really is about PMI surveys. It's about services data, manufacturing data across just really all the major economies, UK, Europe, US. We also get central bank interest rate decisions and unemployment data from the US. So today is very quiet, but things definitely get busier as time goes on. So tomorrow we've got services data from across Europe. Those PMIs are released, and we get the UK construction data as well. We get the private payrolls from the US, the ADP number, that's expected to come in around 200,000. And then we get the US non-manufacturing, so the services ISM data from across the pond. And then on to Thursday, it's the services data from the UK, and of course the central bank interest rate decision from the Bank of England. So little expected really, and as you know, we're now in this month of April, not many meetings left for Sir Mervyn King. He is coming to the end of his time as the Governor of the Bank of England, and very soon to hand over to Mark Carney, but very little action expected. And the same could be said really for the ECB. There is a bit of pressure from the ECB, perhaps at some stage, maybe this year, to cut rates. Market expectations are for at least one interest rate cut at some point in 2013, but we're probably not going to see it on Thursday. So that'll be the focus for then. Of course, we get the initial jobless claims, the weekly figures from the US as well. And then we finish off with the highlight of the week. It's the non-farm payroll. Before the non-farm payroll, there is producer prices from the UK, there's retail sales from the EU. But that non-farm payroll figure will certainly be one to watch, because it's still the target for the Federal Reserve, of course, is to bring down that rate of unemployment to 6.5%. We're expecting a number of around 200,000 new jobs. So if they can sustain that sort of level of job creation, then we might be able to see that in the unemployment rate come down to that target level by around 2015. So getting busier this week. Lots to get our teeth into, and do give us feedback. That's it for this week.